Hi everyone, Gianni DePoce here with you for TheoTrade, and today is Tuesday, the 1st of April, 2025. If only I had some clever April Fool's joke to give you today, but I don't. So let's just get into the charts and see what's going on in the markets here. It's a bit of a wild day in the S&P. It's been all over the place. We were up nicely, but we've since given back those gains. You can see a pretty big sell program just hit the market here over the last couple of hours, and we are giving back most of that rally that we had earlier in the day. But for me, the bigger story is the setup that we had coming out of the low yesterday. And it's for a couple of reasons. First and foremost, you had the NASDAQ futures take out the low from March 11th, but the S&P and the Dow futures did not. We can take that a step further and take a look at the S&P 500 futures, which did not make a new low, whereas the cash index dropped and made a new low. So these types of divergences that we see often occur around market turning points. Now, to be clear, I don't think this is necessarily the bottom. We still have some market internals that need to be fixed. Although I will say that market breadth has been improving. And when I say that, what I mean is that from bottom up, we're seeing less stocks make new lows on this downturn. Even though that is the case, we still have a big problem when it comes to leadership at the sector base level. The strongest performing sector last week was consumer staples, and that is not something that we see in a strong market. And as you can see today, it had a really big rally yesterday. It's pretty much flat on the day. But even if you look around in the market here in the U.S. today, technology is down. The semiconductor index is still down. So it's not like we're seeing leadership from the risk-on sectors of the market, the growth-oriented sectors of the market. It's really kind of just spinning its wheels here, and I think a lot of it's a short squeeze, and a lot of the best opportunities are still coming from one, abroad, and two, the more defensive areas of the market domestically. That being said, we continue to see strength come from precious metals, gold hitting another new all-time high as there is a lot of physical gold flowing into the United States. I would encourage you to look into what's going on in that department because it seems to be pretty legit. Now, when it comes to silver, I wouldn't be surprised to see it spin its wheels and go sideways a little bit here. Overall, GDX and the silver miners are down today as well. But our names that we've been trading in the space for quite some time, Alamos Gold has been holding up very well, going sideways near its all-time highs, as well as Agnico Eagle Mines. Both of those hitting new all-time highs in the last couple of sessions. So that's been pretty good. But back here domestically, I do want to take it back to semiconductors because you take a look at Nvidia, that hit a new low yesterday, and I was talking about this in Theo Live today. And we played the bounce off technical support in a couple of these Magnificent Seven names. The first one being Tesla, which is seeing a nice rally today. And one of the reasons why I think Tesla has the opportunity to stand out against some of its Mag 7 peers is because it never took out this low from March 11th. And this is one of the big rules that we like to use when analyzing markets and looking for new leadership coming out of important market bottoms, and that is the stocks that don't make new lows with the markets, the ones that form higher lows instead, are more likely to emerge as the leaders. So that's what we're seeing over in Tesla, and it's really something noteworthy. You're also seeing that in Apple. It is down slightly on the day now, but Tesla's still holding on to its gains, up a solid 5%. That looks good. But let's take a look at what's happening in China because I think the bigger news is not necessarily the bounce in some of the Mag 7 names, but how some of these terrific 10 names are holding up. NetEase up a cool 2.5% today. Alibaba, although it's down, has been consolidating its gains. We've been holding this stock now for a couple of months, and it's been doing very well for us, enabling us to kind of have some names that are moving well to offset some of the positions that have been moving against us in this market. But Alibaba has been looking strong. JD.com flat on the day, but holding up pretty well. So I like what's happening there. And of course, BYDDY, kind of like Tesla's competitor, holding on in consolidating their highs. We did look at a trade opportunity in Li Auto in Theo's live room today because I like what's happening just in the electric vehicle sector. I was talking about this with some friends lately, And a lot of electrical vehicles, they were subsidized by the government. There's a lot of people selling their Teslas right now. And it seems like there's about to be an oversupply of electrical vehicles. And so I think that's going to help the used car market in terms of affordability, but that doesn't necessarily help the stock prices. For these companies, I think it's more of a story of the innovation, the self-driving. There's been tremendous advancements in a lot of these Chinese EV makers. And I think that even when it comes to AI, China has seems to have turned the page compared to the U.S. ever since DeepSeek came out, and this is why today I was also talking about how I think quantum computing still is the one area of the U.S. market where tech can still display its edge. So there's still a lot of work to do in that space, but I do like what's happening in China, and I expect its outperformance to continue here. Let's take a look at some other markets real quick. Bonds seeing a nice rally. We are not far from making new highs coming up onto technical resistance there. I do like the idea of bonds continuing to rally and interest rates continuing to drop. We've seen them come down on the long end in the longer time frames, 10-year, 30-year, so on and so forth. And I think the Fed is going to be spurred into action at the latest by June. Could even be in May. It depends how market conditions change. But you take a look at crude oil. It's in that sweet spot that we've been talking about. We did bounce off of that technical support zone in that $65-$68 range, and then you have resistance at 76, 78. This is a really sweet spot where inflation is not going to tick higher. I know we had a hot inflation report last month, but I'm not really making much out of it because crude oil is still range bound. Crude oil breaks above 76, 78, I'll start to change my tune. But the big thing for me is that this is a sweet spot where oil producers can still make money, but we're not going to see a big uptick in inflationary pressures. And this puts us in this Goldilocks scenario where I think we can still avoid a recession as long as interest rates come down and unemployment doesn't rise meaningfully, even though we are starting to see some upticks on the unemployment front. And then you can see various parts of the market make a recovery due to lower interest rates. Now, I did have copper up on the screen. We're coming back down from the all-time highs here. This is a big reason why I don't think we're going to recession necessarily, is because you wouldn't see copper on the verge of breaking out. You take a look at cryptocurrencies. Bitcoin up a cool 3% today. You can take a look at the intraday action. A little bit of selling just came into the picture, but overall, trying to cap off a pretty strong day. And I'm still very keen on that former support turn resistance zone of 88 to 90,000. I think if Bitcoin clears that level, we have to start seriously considering the possibility of a low being complete. And I have a really tough time thinking that we would be in a market where crypto is, starting a new bull run and stocks are not participating to some extent. That being said, even if stocks have completed a bottom here, not necessarily the bottom, I'm not ruling out the possibility of a retest of these lows in stocks a couple of months from now. We saw something similar play out back in 2015, 2016, where we had stocks form an initial bottom in August, and then come back about 6 months later and retest those lows in February, and that ended up kicking off an impressive bull run. So, we could be looking at a retest of these lows, maybe, June, July, and theoretically, even as late as October. So I think that a lot of the action is going to continue to be abroad, and we would be wise to continue focusing on that. Fortunately, there's no shortage of nice setups coming from China. And, at some point, I do think there will be a problem with inflation, and that's probably going to come once the Fed starts to print money again and lower interest rates. But for now, that's not really an issue. And in the meantime, our main focus is to see whether the S&P can, one, take out this high from March 25th and clear this former support turn resistance zone. Until that happens, we do need to exercise a reasonable amount of caution. That being said, I have been cautiously adding longs because, again, market breadth has improved, and we're looking for the names that have held up the best, the ones that have consolidated sideways and corrected through time instead of price, because those are most likely to emerge as the leaders once this thing turns around. So that's what I'm looking at. today, guys, thank you so much for watching. And if you do think there's more volatility coming, we do have a really nice strategy to help you weather that storm. I would encourage you to look into Brandon Chapman's Ghost Prints because it's been a strategy that has been sailing through this environment pretty nicely. And so that's the beautiful thing about here. Those of us here at TheoTrade is that there's something for everyone, whatever market environment that we're in. So thank you so much for watching and hope to see you in the TheoTrade chat room.